Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 3rd of October 2021 and we're publishing a video highlighting what happened to gold and silver prices last week and what influences will affect their price this coming week. The content of this video will be almost identical to the regular weekly update we published yesterday. And so if you have already listened to that, there is no need to listen further, unless of course you feel you may have missed something. So here goes. Gold rose $10 last week, rising from $1,751 to $1,761, having hit a high of $1,764 and a low of $1,722. A rise of 0.6%, but noting a lower low and a lower high for the week. In sterling terms, gold finished the week at £1,300, up £20. And in euros, it closed at 1,518 euros. That's up 24 euros. That discrepancy shows the strength of the US dollar last week. Silver rose 9 cents. Rising from $22.46 to $22.55, having hit a high of $22.86 and a low of $21.45, a rise of 0.4%, but like gold, putting in lower highs and lower lows. In sterling terms, silver closed at £16.65, that's up 24 pence. And in euros, it closed at 19.45 euros, that's 19.45, that's up 0.28 euros. The gold to silver ratio broadly remained unchanged at 78 to 1. Bitcoin rose $4,857, most of that in the last 2 days, and stands at $47,742. Looking at equities now, we can see that on Friday they were very positive, with the Dow Jones closing on Friday at 34,326, up 482 points. That's on the day, but still down on the week by some 472 points. Otherwise, we'd have been looking at a very near 1,000-point loss. The S&P 500 closed at 4,357. That's up 49 points on the day, but again down, this time 98 points on the week. And the Nasdaq Composite closed at 14,566, up 118 points on the day, but down 481 on the week. So performance-wise, the Nasdaq was the worst performer. Brent crude closed at $79.28. That's up $1.24. And WTI crude closed at $75.88. That's up $1.90 on the week. Though we did see some rather frightening figures of them entering into $80 territory. The dollar index stands at 94.03. That's up 0.76 on the week. Though we did see it very close to 94.4 during part of the week, which were updated in our daily forecasts. Now, we concluded last week's video with the following forecast or prediction. Quote, while save any disasters on the political front and assuming markets have factored Evergrande in to some degree, we expect to see gold trading between $1,720 and $1,800, with $1,680 to $1,850 as outliers. We can see silver trading between $22 and $23, with $21.25 and $23.75 as outliers. Well, gold traded exactly within our range and closed almost exactly dead center. Silver broadly traded within our normal trading range, but did for a day or so fall into our outlier territory towards the downside. But like gold, closed virtually midway of our normal trading range by Friday. Now, we have had one or two rather critical comments about our trading ranges, saying, look how wide they are, they're $1 apart or $30, $40 apart for gold. Well, when you consider that the pumpers have been shouting $30 silver and $2,000, $3,000 gold we think our rather modest couple percent disparity is just that, quite modest. And frankly, our accuracy so far, even if we say so ourselves, is one of the highest levels on YouTube. And we would argue, even compared to most trading houses. Now, we can see that gold fluctuated between $1,764 and $1,722. Some $42, which is why, broadly, most of our trading ranges are at or around that $50 to $60 level. Sometimes to $80 if we expect a big change. And we can see that silver fluctuated between $22.86 and $21.45, a proportionally higher percentage of $1.41. Now, each morning we've produced daily updates expressing the reasons for the various price movements and news which could affect prices that day and that week. So please tune into these, and as mentioned at the start of this video, we've placed links below. Now, this past week's economic data was varied. We had positive and improving durable goods orders, home price index, pending home sales index, continuing jobless claims, real GDP revision, nominal and real consumer spending and final manufacturing index, and the consumer sentiment index. But on the negative side, we had worsening weekly initial jobless claims, lower Chicago PMI, negative disposable income for August, lower construction spending compared with July, and core inflation remaining the same in August as July, but with market expectations of a slightly lower rate, by 0.1%. Now, as with the previous week, the situation with Evergrande continued to overhang the market and acted as a negative factor affecting equities, at least until the end of the week. Now, we emphasized last week that Thursday, and especially Friday, would be the most important days for economic announcements, and we should expect the greatest gold and silver price movements then, and this we saw, and thankfully to the upside. Now, Gary Wagner, whose analysis we respect, highlighted yesterday, and we'll quote him verbatim. It's slightly long, it's about 2 minutes, but we'll quote him because he encapsulates nicely the overall situation. Quote, "Recent selling pressure in gold has been a result of dollar strength and rising yields in US debt instruments. Looking at weekly charts on Tuesday, September the 28th, it appeared that gold could close lower on the week, marking the fourth consecutive week that gold traded to a lower high, a lower low, and a lower close when compared to the open on Monday. However, the dramatic and strong upside move in gold futures yesterday of $34 changed the dynamics of the week. Today, that's Friday, gold futures had only fractional gains, but even a fractional gain after the strong gains from Thursday changed a weekly candlestick from red to a green candle. The question becomes whether or not this week's fractional gains can be labelled as a key reversal, a pivot from bearish to bullish market sentiment, or simply an upside bounce followed by more selling pressure. The rise in both the US dollar and US debt has for a large part been predicated on the belief that the Federal Reserve will begin to unwind or taper their monthly asset purchases of $120 billion soon. Another factor on the radar of the investment community is the potential crisis that would result if Congress and Senate cannot pass legislation to raise the debt ceiling before October 18th. Yesterday, both the House and Senate approved a stopgap measure to fund the government through December. Still, they did not come up with any legislation to address the current debt limit, which would cause the United States to be unable to make payments on its debt. Although there have been government shutdowns in the past, the United States has always made interest payments on the national debt. The future direction of gold will be largely based upon the future monetary policy of the Federal Reserve. The Fed has invoked an extremely accommodative after the pandemic began in 2020, resulting in a deep recession worldwide. As the economic recovery in the United States strengthens, the Federal Reserve will begin to unwind the dramatic steps it took to temper the recession and aid in the economic recovery. At some point, Most likely beginning next year, the Fed will begin to normalize interest rates, which they took to 0.25%. The recent projection of interest rates released by the Federal Reserve in this month's FOMC meetings, dot plot, suggested that this process of normalization, taking interest rates from near zero to 3%, would be implemented over the next 3 years. The Federal Reserve statement and Jerome Powell's press conference also revealed that they would begin the process of tapering their asset purchases as early as November of this year. Analysts and investors still do not know the pace of the tapering process, although it is believed that they would taper their purchase of US debt instruments and mortgage-backed securities with monthly reductions, which would take roughly a year until tapering resulted in no more asset purchases. Lastly, the Bureau of Economic Analysis today released the PCE numbers for August. The report revealed that inflation continues to grow, with the August numbers showing that the PCE price index increased 0.4%, excluding food and energy, unquote. Now, we tend to concur with what he has to say there. It's encapsulated very nicely. And this is why we're looking ahead. We can see both headwinds for gold and silver, such as tapering, stronger dollar, and potential economic disruption due to COVID-19 having an effect. However, there are some tailwinds. We have a stimulus package still to be announced, and if achieved, will certainly buoy equities and continue to flood the marketplace, perhaps more directly this time with US dollars, potentially undermining its value, unless, of course, the expenditure directly achieves net positive economic gains. But they very rarely happen at speed. So, as mentioned earlier, economic data last week was covered in our daily videos, and this coming week we have the following economic reports coming out. On Monday we have the factory orders for August, Tuesday, trade deficit for August, market services PMI final and ISM services index both for September, and we'll see how they compared to the manufacturing finals that we had this past week. On Wednesday, important ADP employment report for September. Thursday, weekly jobless claims and consumer credit for August. And then on Friday, the all-important non-farm payrolls, unemployment rate and average hourly earnings for September. So Wednesday may give us a heads up for Friday's unemployment figures, or shall we say non-farm payrolls. And Tuesday will give us an indication as to whether services have improved month on month. The key piece of info, though, will be the non-farm payrolls, as this will be the last major employment data the Fed will take into account before its FOMC meeting in early November, upon which it is predicated their decision to cut back on the bond buying, i.e. tapering. That decision is expected to be made then. So it could indeed be a game changer. So before we give our forecast for next week, looking at the technicals, we can see that gold is still in a bear flag pattern. We have resistance at the 50-day moving average of $1,784 and support at the 10-day moving average of $1,752. The MACD histogram is pointing to consolidation. Silver prices did rally due to the slight dip in the dollar value and slightly lower yields, and we now have ultimate support at the 2020, that's June 2020 lows of 1625, but long before that level there are numerous other support positions, the perhaps nearest being at $22.10, and with resistance like gold at the 50-day moving average of $23.74. Short-term momentum has turned positive as the fast stochastic generated a crossover buy signal, and the RSI is also reading positive, as it suggests that silver has been oversold. So where do we see gold and silver prices moving next week? Well, save any disasters on the political front, it's next week's economic data that is going to influence prices and, of course, the value of the dollar, and especially the various job reports on Wednesday, the ADP, Thursday, weekly unemployment data, claims, and culminating in Friday's non-farm payrolls. So our forecast for this coming week is broadly similar but not identical to last week. We expect to see gold trading between $1,720 and $1,800, with $1,680 and $1,830 as outliers, and we expect silver to trade between $21.75 and $23.25. We can see a reasonable move between those two figures, with $21 and $23.75 as outliers. What do you think? Please share your thoughts where you think gold and silver are going to end up this coming week. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, press the bell sign, give us a thumbs up, thumbs down, and comment. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.